The question is, what is really happening? Why stocks are dropping? Are we getting into a crash right here? Hello everyone, welcome back to our channel. So yes, Chinese stocks are dropping, growth stocks are dropping, and recovery stocks are dropping. So today we are going to talk about why that is happening and what I'm currently doing with my investments. If you're new to my channel, welcome, and please consider subscribing and smashing that like button since it really helps the channel out. Also, I have a completely free Discord group chat in which we're already over 550 members. The link is down below in the description. So yesterday I woke up and saw this. Yes, I have a gadget for Robinhood on my iPhone. Could be very stressful for many, but I love it. Anyways, it was 8:30 a.m. and my portfolio was already down 6% since the day before, and already knew it was going to be a rough day, but an excellent day to buy something, to buy the dip. Surprisingly, my portfolio ended on the green, but still was a difficult morning for the stock market. But why? Why is the stock market dropping and Chinese companies are getting a big hit right now? Let's get first into the stock market, as I think it is very important. First of all, the Dow Jones, S&P 500, the Nasdaq, Russell 2000 ended down between 0.7 to almost 1% yesterday. And even though there is a reason for this, I was actually expecting this to happen, just that I didn't know when. The reason why it dropped yesterday was because of this: concerns about the global economic comeback from COVID-19. The losses came as Japan declared a state of emergency in Tokyo as countries deals with a rebound in cases due to the COVID variants, which obviously concerns a lot of people, as many would think that the reopening of the economy would be affected once again, and that is why we see that the most affected companies were recovery or travel companies, just like cruise line stocks, airlines, retail stocks, and after that, tech stocks also dropped. Also, we saw that Labor Department's latest jobless claim came in unexpectedly higher at 373,000, signaling a possible slowdown in the labor picture amid the COVID recovery, which obviously investors did not like that, as a slowdown in recovery of labor could mean that companies could get affected as well by a slowdown, affecting their growth. We also saw that the US 10-year Treasury continues dropping, as it is already below the 1.3 mark, which is also a possible sign of economic growth slowdown. I do have to say that many were expecting this kind of pullback to happen sooner or later, as the market has been going up for about 2 weeks now, hitting an all-time high every single day or so. The Dow Jones is up since June 18th, S&P 500 as well, and the Nasdaq even before, since May. So many were actually expecting this kind of pullback. Does this mean that we are in a crash, a recession? No. Not at all, or at least not yet. I mean, stocks like Apple is almost at an all-time high, Microsoft as well, and many more. Obviously, as a growth stock investor myself, we know that growth stocks have been getting hit harder than these other stocks. Wish is down, Fubo is down, Tattoo Chef is down, TrueLeaf as well, and many more growth stocks. Does this mean that this is time to sell? No, it's not, and we are going to talk about that later when we talk about what I'm doing with my investments. Now, what about Chinese stocks? I suppose all of you already know what happened with the Didi IPO days after going public. Yes, China bans Didi from app stores just days after massive US IPO, even though it was one of the biggest Chinese US IPOs in a decade. Chinese cybersecurity regulator has ordered its removal from China's smartphone app stores. The most important question here is, no one knew about this? It doesn't make sense to me. Somebody had to know that this might have happened, which obviously makes Didi look bad, as apparently Chinese regulators asked Didi as earlier as 3 months ago to delay its landmark US IPO because of national security concerns, and still they decided to force their way into the market without completing a thorough data security assessment. Many may ask, well, why does that affect all of the Chinese stocks and not only Didi? We can see that Didi is down over 28% since they went public, but Alibaba is also down 12.37%, breaking below the $200 mark. Even NEO is down 16.61% in the past 5 days, as unfortunately, in my opinion, this increases the risk of investing in Chinese companies, because what these events have shown us before is that the Chinese regulators will and can do whatever they want with any of their companies. So investing in a Chinese company not only includes the risk of a growth company and the risk of the US regulations, but also Chinese regulations, which we know the difference between both countries. When a country has a lower regulator environment like the US does, it tends to work way better as they let companies do their thing, legally, obviously. While in countries like China, it has a communist structure, just like my country does, and believe me, it is not easy for companies, as regulators can do whatever they want whenever they want. I do have to say that many Chinese companies look very attractive at this moment. Just look at Alibaba. In my opinion, it is very cheap at this moment and way more below $200. It is the leader of e-commerce in China, has exponential growth, excellent management, and just because it is a Chinese company, many don't like to invest in it because it includes a risk added that maybe US companies don't have. But it is not a secret that China is the world's second largest economy. That searched recently, that is why if we compare the Invesco Golden Dragon China ETF, which is an ETF based on a fund that invests in Chinese companies just like Alibaba, JD, NEO, Pinduoduo, and many more, which as you can see, 98.85% of their allocations are from China. So if we compare it with the S&P 500, we can see that the performance has actually been pretty nice. The S&P 500 is up 104% in the past 5 years, while the PGJ ETF is up 86.77% right now. But before this year crash, it was actually up 195%, which in my opinion is excellent, and that is why people invest in Chinese companies, because of the growth and potential companies offer and that the Chinese economy offers as well. Is it riskier to invest in Alibaba instead of Amazon? Yes, it might be. Is it riskier to invest in NEO instead of Tesla? Maybe, yes, but just because they are Chinese companies. So if you are someone that is able to understand that risk and tolerate it, then that should not affect you right now. Obviously, it is hard to see your positions down for something that your company did not do, but you gotta think long term, and also we need to understand that selling brings more selling, and that is why downturns occur faster and harder than run-ups. Same with the stock market. Yesterday, everything started crashing. As I said, my portfolio was down over 6% before the market opened, but it actually ended on the green by 0.72%, which I think was an incredible recovery in a single day. With all that said, what is my recommendation and my strategy at the moment? I know that it is difficult to open your portfolio and see how you are losing a lot of money, because we all say, I don't need that money right now, I'm investing long term, but we don't want to lose money, and even thinking long term, the short term effects affects us. We are humans, but we gotta understand that days like this are better to just don't open your portfolio, or buy if you want and can buy the dip in your positions. Yesterday, I bought a little bit of Wish and Trulieve stocks, for example. I could have bought more of the Tuchev, Fubo, Shift, or finally start a position in SoFi, as it is at $16.62 already, but I didn't. Why? Well, because my strategy is simple and might not be the best one for everyone, but let me explain. Obviously, I have said it before, I'm not a millionaire. I don't make millions of dollars a month in which I can invest $10,000 monthly in the stock market. I can't yet. I will, but not yet. What I like to do is that if I have $500 or $1,000 in cash, I will not invest it all at once in a single day, as I don't know what will happen tomorrow. Because if I buy everything today and I spend all my money today and tomorrow it drops even more, I would like to buy, and I would like to be able to buy more. Not everyone likes this strategy, but still it is the one that works for me, and I would recommend anyone to think about it. put it in practice if you can with fake money in TDMRJ, for example, to see if you like it. Now, my thoughts on Chinese companies. I currently don't own any Chinese company. I used to invest in Baba. I bought it back in 2019 and sold it a year later in 2020 with a nice profit, as you can see. But that does not mean I don't like the company. I love Baba, their business model, everything they offer, their growth, but I don't like how Chinese companies are so easy to manipulate right now. The truth is that maybe I should have held it for a long term, as I always say, but I thought I prefer to just invest in the US stocks and avoid that extra risk. Hope you enjoyed the video. Please don't panic sell, but subscribe and smash that like button since it really helps the channel out. Thank you and see you next time.